we've actually said single digit gold silver ratio, and we've got numbers, but because I don't want to go straight into the Max Kaiser camp, we've held back on those, but I've got point and figure targets quite beyond that. But I'd imagine you would have a period of rest, much like we're having now at the second interim, only maybe even a bit longer, but I wouldn't say too long. At the 330s level that we forecast. And HVF method is the most reliable targeting mechanism I have. And it consistently performs, it consistently provides interim levels, and you can see how you got pushed back. In the big time frames, when you're looking at a quarterly chart, this whole pullback period could come down to nothing more than that one shooting star green candle that later gets rebuffed and trades all the way up, all the way up. If we do the walkout, we go all the way up. We run well through 333. We pause for a while, and then we go further again. So because I'm utilizing leverage, I really am interested in the periods that are going to be quick, dominant, and are in between the interim and the final targets. And if we are finishing here, this could be a fabulous run.
Market analyst Francis Hunt believes the gold and silver bull market may be entering one of its most explosive phases yet. Using advanced HVF and point-and-figure chart analysis, Hunt suggests silver could dramatically outperform gold, potentially driving the gold-to-silver ratio into single digits during the next major rally. Analysts note that current market pullbacks may simply represent temporary consolidation before another powerful breakout higher. Hunt argues that once key resistance levels are cleared, precious metals could experience rapid momentum fueled by inflation fears, currency debasement, rising debt, and growing investor demand for hard assets. Long-term charts continue signaling strong bullish potential for gold and silver markets. Subscribe now for daily updates on precious metals, economic trends, and wealth-building opportunities. Stay ahead of the financial shift and never miss a market-moving alert.
That's not our top call for silver. It's just our highest dollar price that we've gone public with so far. And it stems from a macro setup. I'll share the screen in a second. I'll just get this ready. But the setup and this. So there's quite a bit to just say that this pullback that we've experienced was bang on time and where we expected it to be. In and around the $95, $103 point, we were expecting a major pullback. And I will show that to you the minute I get the chart up. So I'll just get that draw up quickly and show that to you. And say that if we are done now with this pullback, I don't think we just go straight. Who knows? We can go straight to new highs. But trading higher, just walk out. But I have a feeling we might sell off again at 100 before the last high. But this setup, which we showed you prior our second interim being made, was always saying that there's a major rest to come in and around this point. We've appeared on your show before at the 25, the 35, the 45, the 55 range, and we said your big rest will come when you make this dash line. It's amazing that we're doing this interview and the gold silver ratio is still falling and that 15-minute silver chart is still running. And we said you'll have a rest and a strong pullback when you run the second interim here. And that was from the 90s. We had to trim this high point, which actually generates that. So it's more like the mid-upper 90s because the high here that was actually in the 50s isn't registered correctly. So we had to do a minor manipulation on the chart. But this is the 330 range. And once you've finished dealing with, and you've had a pullback with your second interim, and you get back above and you've dealt with it, you wind up, and then suddenly you go. This open territory, when you make the next run, usually comes fast and furious. Then you have a pullback and you churn again. So this period here and here is going to be exceedingly good. And that's, for now, our highest dollar forecast. But we've actually said single-digit gold-silver ratio, and we've got numbers. But because I don't want to go straight into the Max Kaiser camp, we've held back on those. But I've got point-and-figure targets quite beyond that. But I'd imagine you would have a period of rest, much like we're having now at the second interim, only maybe even a bit longer, but I wouldn't say too long, at the 330s level that we forecast. And HVF method is the most reliable targeting mechanism I have. And it consistently performs, it consistently provides interim levels, and you can see how you got pushed back. In the big time frames, when you're looking at a quarterly chart, This whole pullback period could come down to nothing more than that one shooting star green candle that later gets rebuffed and trades all the way up, all the way up. If we do the walkout, we go all the way up. We run well through 333. We pause for a while, and then we go further again. So because I'm utilizing leverage, I really am interested in the periods that are going to be quick, dominant, and are in between the interim and the final targets. And if we are finishing here, this could be a fabulous run. So gold and silver people, you're in the right place. Don't go anywhere else. This is your beauty queen. Your NASDAQ is actually underperforming you since 2021. And typically you have a decade. And by the way, whilst we've been talking, having just got off a community update, putting my people long silver on a small time frame, a very small time setup, which you can see here. This is what we do, by the way. During that period, the gold and silver ratio hasn't stopped beeping, and the silver price hasn't stopped beeping, and this hasn't stopped moving up. So if you want a little bit of this is what we do. Sorry, all the alerts were on. Sorry, they were beeping throughout while we were interviewing, but this is what we do. We really trade. We have the platforms on, and we have put on leverage longs, and we've made, whilst we're speaking, probably $2 to $2.50 from our entries. So it's been a great call.
Precious metals analyst Francis Hunt believes silver may be preparing for a historic breakout after completing a major correction near the $95 to $103 range. Using HVF and point-and-figure analysis, Hunt argues the recent pullback was expected and could mark the foundation for the next explosive rally phase. Analysts now project silver could eventually target the $330 range, while the gold-to-silver ratio potentially collapses into single digits. Hunt notes that gold and silver have significantly outperformed major stock indexes since 2021, reinforcing bullish momentum for hard assets. As inflation, debt expansion, and fiat currency concerns grow, investors increasingly view precious metals as long-term wealth protection. Let's get back to the interview.
That's your blow-off period for gold. This is a broadening structure. You had a little bounce at the splitter. You came and you bounced again. This is a hammer and you're going up. That's my take on gold. This is on quite a big time frame daily. I say it's not really big, but in terms of, because we are showing you things on a 15 minutes, let me just take you down and show you that you had a gap open. I love that when that happens. And you turn around and you absolutely fly back up. That's what's happened on the silver, and I think the gold's going to follow. There's your opening gap on a Sunday. They try to push it in the way it's not going, and it's rejecting, and it's going to close that gap. And that was a flush out, and you're going higher. That's my take from the Sunday open. It's on a low time frame. Don't day trade this opinion. By the time you see it, it'll be delayed. We have real stops. We have money management. We trade for R's. We do a lot of things to maximize our wealth building. But that goes up. You mentioned copper and uranium. I'll just do copper. Here's the thing that you should bear in mind. In fact, let's go futures and get ourselves the continuous chart, high grade. There it is. That's the one I want. And go to a big time frame. So these things are going up. Remember this. They are showing you the debasement of fiat. Which one goes up more? Don't try be. Here's the tendency when people see something go up. They want to be in all of them. I was in that. It's like you're winning many times by being in copper, by being in uranium, by being in silver, gold, platinum, zinc, name them all. And the key thing is you're going to make the most money by being in the best one. And I've shown you the best one. I've shown you the best one. Because if I take this copper chart, which looks very positive and will go higher, it's because of the fiat debt debasements, it's going higher. It will go up generally, even against many other bases of comparison. But let's just use our gold matrix, 1 ounce of gold. You divide it by 1 ounce of gold and you go up, and it is in a massive falling trend in gold ounces. It's currently up. It's going to have a little catch up because gold was currently down. Maybe you want to draw a falling wedge on that if you can. But that is not a small time frame chart. That goes down to that. And everybody wants to sound so innovative. There's too many people talking about gold and silver. I'll be the copper guy. I'm going to keep talking about copper. You're underperforming gold. And you have been from 1999 to today. And the answer is quite simple. One is a big time monetary preservation of asset dense value, and the other one, only in China to a degree, has some monetary element, but otherwise is considered an industrial metal. Yes, it's important. If you want to build all the green, it's all the stories you hear, it's all true. We don't have enough of it. I'm bullish it. But the point is, the Porsche Turbo's keys are there. Why are you jumping into the VW Polo? The one's going to smash him. It's going to smash him. And everybody wants to be super clever. I like to make it simple. I get it all the time. What about zinc? What about this? What about that? What about this? They'll all go up and you can look 10 times smart because you're in 10 things, or you can just make more money. It's not about being right and how many times you get to be right. Make the money. I start off often with the wrong view, and I have a very quick, you saw that on the gold silver ratio. We admit straight up, we were saying there's a high risk. Stock markets are peaky. This could break up. Maybe we'll get one more sell. We like the silver and gold charts. We want to be in. We wait for the gold and silver to confirm it could be up. Boom, it starts breaking down. Great. Best news. We're not panicking, and we charge in and we buy. We charge in and we buy. And that's what we've been doing. Charging in and buying. And now we've been buying continuation patterns on 15 minutes and making money on that in silver. And I will close part of that position at the target and leave the rest on for the far bigger target. So I've smashed in some bigger size with conservative leverage with a stop close to its entry that I can hold all the way to 333 and maybe beyond on our gold silver ratio exits, and some of the bigger numbers I've yet to mention publicly that we have on point and figure targeting. And this is copper. It's underperforming. Yeah, for the quarter, it's up. Well, you know what happened to gold during that quarter. Wait till gold starts going again. They'll both be going up, but now gold will be going up again, and this will stay grinding along the bottom. This is a bottom feeder against gold. It's an absolute bottom feeder. Is it short? Is it useful? How much production is going to be going on? How much building is going to be going on if we have this debt-based crash? Are you going to build an extension? You're going to buy your neighbor's house and knock his house down and extend and build Alexei Pink Gin Palace with your underground basement and your 14 cars that you also plan to be buying that will all be consuming copper? No, the jobs will be less. Your clients will have less money. They'll be spending less. You'll be doing well to still be in work. It'll be CV19 all over again. They have the power to rug the entire economy. And this is an industrial metal. You want a monetary metal in a monetary collapse.
Analysts believe gold and silver are entering a powerful breakout phase as fiat currency debasement, rising debt, and economic instability continue reshaping global markets. Recent chart patterns suggest silver may be leading the next major rally after rejecting lower prices and rapidly recovering from recent sell-offs. Experts argue monetary metals like gold and silver are positioned to massively outperform industrial commodities, such as copper during a debt-driven financial crisis. While copper remains bullish long-term due to infrastructure and green energy demand, many traders believe gold offers superior protection and stronger upside during periods of monetary uncertainty. Investors increasingly view precious metals as the ultimate safe haven assets in a weakening global financial system. Let us know your opinion on this analysis in the comments below. If you enjoyed this video and found it valuable, make sure to subscribe and enable notifications so you never miss our latest updates on gold, silver, crypto, and global markets. Thanks for watching The Wealth Mint. We'll see you in the next video.